Hey, it's Ty with Credit Suite, and in this short video, we're going to talk a little bit more about how you can actually get a SBA loan. So, SBA loans offer some of the best terms available in the financing across the entire business world. So, it's important to note that SBA insures loans in the case you default. They actually don't issue loans themselves. So, some people think they're going to go to SBA and get a loan, and that's not how it works. You're actually, most of the time, or almost always, going to go to a big conventional bank that then has loans that they offer that are insured by SBA. So most conventional banks such as Wells Fargo, Bank of America, Chase, the big banks are where you're actually going to go to secure an SBA loan. SBA just insures that loan in case you default. The bank basically can then collect money from SBA. That's how that process works. So to get approved, you've got to go to a conventional bank, and there's a lot of things you're going to need to know or need to be able to get approved. So first of all, you're going to need good personal and business credit. Now, on SBA's website, they actually say that you shouldn't have any blemishes on your credit report. So if you have any derogatory items at all on your credit report, then you need to make sure that you go through a process to dispute any accurate, unverifiable accounts and have them removed. You also need to make sure you have established business credit because it's a requirement to get an SBA loan. SBA pulls something called a FICO SBSS score, and you have to have a 140 score or higher to get approved. Well, you can't get a 140 score higher unless you have established corporate credit for your business. So make sure that you're building your business credit. You also need to have good bank credit. So banks have their own internal credit score called the bank rating. And in order for you to have a low 5 rating, which is the minimum you'll need to get a business loan from a bank, then you've got to have at least $10,000 average in your bank account over the last 90 days. Now you need to have a resume showing that you have experience in the industry that you're in. You need to have a well thought out business plan with projections and that show that you have a good idea of your industry in the market. You need to have 3 years of business and personal tax returns, and your business tax returns should show a profit and increasing revenues from year to year. You're going to need a current balance sheet and income statement showing that you have the funds available to actually repay the loan. And you're also going to need account receivables to supply if you have any of those, collateral to offset the risk. So usually all of your business assets are taken as collateral, and some of your personal assets for SBA loans that can even include your home, and you typically need to have about 50 to 70% collateral towards what you're actually borrowing. Articles of incorporation, any business licenses that you have. You're going to need all contracts that you have with third parties, your lease if you're leasing your building, or details on the ownership of the building if you own your business, and in order to get approved, you've got to meet SBA's approval requirements. So first of all, let me stop here. Everything I've talked to you about so far, that's the income documents and the information that SBA needs to process your loan. But keep in mind, it's not just a matter of gathering these documents and submitting them. You're being asked for these documents because they're going to be highly scrutinized to make sure that your business is solid, that you have the ability to repay the loan before you're actually going to be able to get approved and fund. So there's a lot of things that you must meet criteria-wise to get approved. For example, you have to run a for-profit business. You cannot be a nonprofit to get an SBA loan. That you must be small or dominant in your space is SBA's exact requirement there. Do business in the United States. You have to have reasonable invested equity into your company. You have to use other financial sources, including personal assets, before seeking help. They want to make sure you have skin in the game. They want to make sure that you're personally vested in this and that you've got invested equity and that your own assets that you're actually contributing into your business and willing to use as collateral as well. And you obviously need to show you have the ability to repay the loan. You have to use the loan for business purposes, and you can't be delinquent or have defaulted on any government debts to actually be able to get approved for an SBA loan. So that kind of gives you a pretty good idea of everything you need to know about how to get a SBA loan, or exactly what it takes to go through the process of approval, the requirements before you even apply, and all the documentation that you're actually going to need. So if you found this information helpful, then please like this video and make sure you also click to subscribe subscribe to our YouTube channel at youtube.com/credit suite, because there you're going to find that we have 30 to 60-minute coaching sessions that dive in deeper to SBA loan requirements, exactly the process to get approved, and videos that map out other types of financing you can secure that don't have even a fraction of the requirements or income documents that SBA has. You'll also see how to get approved for a loan, credit lines, where to go to get approved, and we even map out how to build your business credit that's linked to your EIN and not your social security number. So please like and subscribe, and I look forward to seeing you on our next video.